What if I told you four of the highest rated stocks in our entire quant model are not the names getting screamed about on financial TV? Instead, they are quieter companies that just keep consistently growing their earnings year after year after year. These are the type of stocks you want to buy and hold for the long haul to enjoy ongoing outperformance. Now, if you like these kind of stock recommendations, then please hit the like button as it tells me to record more videos like this in the future. Now, let's jump in with our first of the four stocks today in Livanova and LIVN. This is a medical technology company that quietly sits inside operating rooms all around the world. And if you've never heard of them, well, that's kind of the point of this video as we are searching for hidden gem stocks. By the way, I should probably tell you who I am. I'm Steve Reitmeister, but everyone calls me Righty. I've been investing for over 40 years and currently a partner at WallStreetZen, where our quant rating system pinpoints the stocks with the highest likelihood to outperform. And I know that you already know this, but I've got to remind you that investing carries inherent risks, so always do your own due diligence before buying or selling anything. Okay, let's get back to Livanova. They make the heart-lung machines used in open heart surgery, and they make implantable devices that treat epilepsy and other neurological conditions. This is not trendy gear. It's equipment that hospitals depend on every single day, and once a hospital builds its workflow around their machines, they do not casually switch to somebody else. This is exactly the kind of sticky, durable business you want to hold on for the long haul. And the tailwind behind it is about as reliable as they come, that being the global aging of the population. As more people get on in years, the more they will need cardiac procedures and more surgeries and more patients who will need the kind of neurological treatments Livanova specializes in. This demand will just keep quietly compounding in the background no matter what the stock market does. The key here is consistent growth, and that shows up in spades with 16 straight earnings beats. It sounds like those good times will continue into the future as management actually just lifted its guidance for the full year. Now, this ongoing earnings success is the hallmark of the kind of stock you want to own for years and years. Now let's discover what the data in the Zen Ratings quant model has to say about the stock. Note that the model runs every stock through a 115-factor review, and then we boil it down to an intuitive letter grade of A through F. Indeed, A's are the best given their long history of outperformance. You also get a deeper dive into the stock's strengths and weaknesses with the 7 underlying component grades, which look specifically at areas like growth, value, momentum, and more. Livanova, along with the other 3 stocks I'll be talking about today, they all earn a Zen rating of A. This is our strong buy recommendation, reserved for only the top 5% of stocks in our database when we look at over 4,600 stocks. Now, Livanova is even a notch better than that in the top 4% of all stocks analyzed. The component grade shows off more of the strength, starting with the top 16% showing for sentiment. That tells you the smart money likes this stock as well. Growth comes in a notch better in the top 12%, not a surprise given the earnings beat consistency, and the standout grade is safety, all the way up in the top 5% of all stocks tracked. I love medical growth stocks like Livanova. That's because they have enough growth to attract investors during the big bull runs, and then when the market clouds darken and investors go with a flight to safety, then healthcare stocks are a preferred choice. Meaning, this is a great all-around stock to own for the long haul, no matter what happens with the overall market. That is a rock-solid way to start off our stock picking video today. Quick aside, before I continue, if you enjoy discovering hidden gems like this, then the best thing you can do for yourself right now is to sign up for my next live training session this coming Monday. The focus is on timely market insights plus my top picks. Now, it's totally free, but you do need to sign up. Do that now to join me this coming Monday at 7 p.m. Eastern Time. Just go to wallstreetzen.com/live. The second buy and hold stock is the owner of some popular consumer brands you will likely recognize. That brings us to Tapestry with a symbol TPR, which is the parent company of Coach and Kate Spade, 2 of the largest purse and leather good brands in the world. Here is why Tapestry belongs in a long-term buy and hold conversation. A great consumer brand is one of the most durable assets in all investing. It's a form of wide economic moat because loyal fans keep on buying. And the more they buy and the more they brag about their products, the more other people come to purchase from those companies as well. And right now, Coach is on fire with younger shoppers, which is bringing a whole new generation of customers into the brand. This explains why management has raised its outlook multiple times this year, and they are buying back their own stock hand over fist. When customers line up for a handbag because of the name on it, the company does not have to compete on price like a commodity business does. That protects profit margins in the good times and bad. The earnings story backs this all up with 35% expected earnings growth this year over last. That tapers off to about 22% earnings growth over the next 3 years, but that is about 2 times the pace of the average company these days. Wall Street is absolutely pounding the table on Tapestry shares. Not just a consensus strong buy, my recommendation. Even better is the cluster of highly ranked analysts with price targets that imply upside potential of greater than 50% in the year ahead. Now let's bring in our data because this is where Tapestry really shines. We have another A-rated strong buy recommendation from the Zen Ratings quant model. All in all, Tapestry scores in the top 3% of all stocks tracked based upon their truly standout fundamental profile. Drilling down into component grades, the party starts with a top 11% showing for artificial intelligence rating. Now, quick note on that AI score. It's not about how much the company is involved with AI. Rather, it's our usage of AI to discover stocks likely to outperform based upon patterns in the data. Things only get better from there, including a top 10% showing for growth, which is the best component to foreshadow more earnings beats ahead. Sentiment comes in the top 8%, and then the real showstopper, financial strength, is in the top 1% of all stocks tracked. That means they have a strong balance sheet and an incredibly well-run operation. The one knock here is on value, which comes in kind of middle of the pack. Now, after a big run-up in shares, they are no longer cheap, but you rarely buy a truly great brand at a discount. You pay up for quality, and you let it compound over time as they keep growing. The top 3% showing for the Zen Ratings and the strong Wall Street support increases the odds this stock keeps outpacing the overall market for the long haul. The next pick is the one nobody will expect in a buy and hold list. It might even sound a little boring on the surface, but stick with me because the numbers on this one are anything but boring. Before we get to that pick, I hope you are getting value out of this video. If so, then it's a good time to hit subscribe and turn on the notification bell. That's because I publish videos like this several times per week, and these actions ensure you will actually see these next videos. Okay, now we're going to move on to the third stock out of 4 today in Easy Corp with a symbol of EZPW. This is a massive chain of pawn shops. Yeah, pawn shop. Maybe boring on the surface, but hang in there for a moment as I spell out the attractive investment opportunity. So here's the thing about the pawn business. It is as recession resistant as any company will be. When the times are good, people will spend money at the pawn shops. And when times are tight, people need short-term cash and they walk into the pawn shop to get it. That means that rain or shine, Easy Corp makes money in both environments. This has allowed them to greatly expand their store count across the United States and into Latin America. The growth here has been generally impressive. Easy Corp's earnings grew nearly 47% over the past year, which is about 3 times the pace of the industry average. Wall Street has taken notice, and the conviction here is very strong, leading to a strong buy consensus from the analysts. That includes John Hecht at Jefferies, who ranks in the top 18% of all analysts for his stock picking prowess. He sees at least 50% share price upside in the year ahead. Now, Hecht has the kind of track record that when he talks, others are wise to listen. The Zen Ratings agrees with a bullish outlook, not just A-rated, but actually in the top 2% of all stocks after that full 115-factor review. This points to a truly first-class fundamental profile and very high odds of future share price gains. Gladly, the 3 most important component grades are all near the top of the pack. We're talking about financial strength and sentiment, both in the top 12% of all stocks, followed up by growth in the top 11%. Now, growth and financials talk about how well run the company is and the likelihood of more growth ahead. Sentiment tells you the smart money is already leaning into these shares. Yes, there are some C-rated component grades on the screen, but none of them scores lower than the top 33% of all stocks analyzed, meaning there's no real soft spot in their profile. That is exactly what a durable compounder looks like, and another great long-term buy and hold selection for you to consider. Before we get to that last stock, one quick thing. If you want to stay one step ahead of the market, then join me live every Monday at 7 p.m. Eastern Time. That is when I share my updated market outlook and trading plan to outperform. This is also when I unveil my trade of the week based on our proven Zen Ratings quant model and my greater than 40 years of investing experience. Now, it's a free event, but you do need to register. Just go to WallStreetZen.com/live or click the link in the description below, or scan the QR code on your screen. Just pause the video for a moment to sign up. I will be patient and wait for you. Then I look forward to seeing you on Monday. Okay, time for that final stock on the list today. The company steadily and quietly makes tiny components that end up in a ton of things people use every day all around the world. And almost nobody talks about them, which is a big part of the investment appeal. That company is Knowles with a symbol of KN. Knowles makes microacoustic microphones, specialty speakers, and high-performance components for your hearing health, premium audio, and medical electronics. Think about that age in the population we already talked about a little bit earlier. No doubt that leads to even stronger demand for their wearable and hearing technology. And that growth trend has a long runway, which is perfect for our selection of buy and hold stocks today. Let me be specific about their impressive growth prospects. prospects. Right now, analysts predict 66% annual growth year over year. For as awesome as that truly is, it may prove to be on the light side. That's because they beat expectations by 50% last quarter, and the previous quarter they beat by 40%. Indeed, they are flexing some serious earnings momentum muscle right now. Notch by notch, we have been sharing with you stocks that score higher and higher in the Zen ratings model. Indeed, we have saved the best for last, as Knowles is in the top 1% of all stocks analyzed. So perhaps it's better to say it is an A-plus company. As you would expect, their fundamental strength shows up in the component grades. Sentiment comes in the top 14% of all stocks. Financial strength a notch behind in the top 13%. Then we have top 7% for growth, which is based upon 22 different measures of the consistency of growth, which is the best at foreshadowing even more growth in the quarters ahead. And the standout grade of the whole profile is momentum, up in the top 4% of all stocks tracked. As they say, a body in motion stays in motion, and good reason to believe these shares will stay in motion for quite a while. Now, Knowles is not just highly rated in its own right. It is currently the #1 ranked stock in the entire communications equipment industry, outpacing other heavyweights like Hewlett-Packard Enterprises. Now, when a little-known component maker outranks the household names in its own backyard, that tells you the quant model is seeing something the crowd has not caught on with yet, that often points to outsized performance in the months and years ahead. So there you have it, 4 quality growth companies, perfect for a buy and hold portfolio. Every one of these came straight out of the data on WallStreetZen.com. Note that our Zen ratings are updated daily, so always a good idea to review those ratings on our quote pages before you buy, hold, or sell any stock. So be sure to bookmark WallStreetZen.com for your future visits. Now I want to hear from you. Which of these 4 stocks are your favorite? And is there any buy and hold names I didn't mention that deserve a spot in my future video? Share it with me in our community down in the comments section below. And if you want to know which stocks I'm keeping an eye on during the latest tech sell-off, then check out the video that's popping up on your screen right now.